on that note, let's move to the
Sure.
private lending, because I think there's a lot of people out there that don't know a whole lot about it. If you're not directly in the investment game, so to speak, either typically it's used with investors who are flipping properties. They're going to buy a property, they're going to fix the property up, and then for a short period of time, maybe 3 months, maybe 6 months, maybe 9 months, 12 months, and then they're going to sell it. That's one of the most common reasons to use private lending. But why don't you tell us about the private lending business, so those in the audience who don't know about it, tell us what it is and how it's different than just going to Wells Fargo or your local lender and getting a loan.
You're not going to be able to go, first of all, forget the big banks. Don't get me started.
Sure. The brick and mortar, don't get me started.
No. I mean,
they've ruined so many of my clients' deals.
I was just going to say.
Caused me nightmares. Yeah,
we'll leave it there because we all agree.
Yeah.
So, but you're also not going to be able to necessarily go to a community bank or any, credit union and close a deal within 30 days. It's just not going to happen. The most important thing to know about private money is the ready availability of the money. And if your deal is good, I want to fund it. Now, you have to look at the big picture. For people to understand what private lending is, it's basically quick access to capital. And what do you have to do to really be able to get a private loan? It's simple. I say it starts with the 3 C's. You have to have the capital to close it, carry it, and construct it. And that's for real. If you're whether you're a landlord or landlady or you're a flipper, you've got to have capital. Because if you're doing projects every month, I guarantee you will hear that sucking sound out of your bank account.
Yeah.
You're going to be writing so many checks, whether it's, never mind interest, but just to your vendors and everything else. So if you buy really right, yes, you can get 100% financing. You've done documents for those deals that I've funded 100%. I've got some young guys who focus on the north part of Palm Beach County. I'm doing another deal with them now. It's, I'm funding 100+% because I'm giving them money to rehab. But they've got a track record. They've got experience. They've got credit. They've got capital they work with. They're not going to be strapped. And now it's going to be interesting as we may, and I say may, be sliding into a bit of a recession in the third quarter. I'm tightening up a little bit as far as, I'll give you an example. When I underwrite, I want to go back either 6 months or a year. Now, a year ago, the market was different. The market was pistol hot. Interest rates were half what they are now, as we know. Mm-hmm. So the last 6 months are really the market for me. So let's just say if the high sale was 500, but everything else is in the mid 4s, I'll take the 3 comps in the mid 4s. That's my comp. If somebody's saying, oh, it's worth 500. Well, it was worth 500 maybe 6 months ago, and that's your high sale. You may not get, an appraiser on a retail deal is going to be cognizant of where the market's going and doesn't want to get screwed. So I'm being realistic. I'm being, I want them to succeed. So one of the reasons why we're moving away from the hard money environment is because of the stigma with the hard money reputation. It used to be hard money lenders were, shysters. They were in the loan to own business. They would loan on something because they wanted to own it themselves, and they were hoping
they want you to fail and foreclose on it, so they get all the equity.
That's not me.
Right, I get it.
So
you want them to succeed,
absolutely,
and you want your borrowers to get their interest paid.
And some of these guys you're mentoring anyway, right?
Well, a lot of times,
so you have some loyalties to both sides. Sometimes,
yeah. And again, my fiduciary is always going to be to the lender,
of course.
But I want the borrower to succeed and hopefully come back to me to do more business. I mean, I've got
by the borrower succeeding, the lender succeeding.
It's a win-win all around.
Right.
Sure.
Yep.
And look, if somebody has, trouble, can't pay, is facing the challenge, pick up the phone and let's work it out. Let's see what we can do to avoid the worst case scenario. What's the worst case scenario? Foreclosure. Mm-hmm. And obviously, if we get there, then they're going to you. They're going to, lenders are going to come to you and you'll start the process. But I've been very fortunate since the Great Recession, and I don't believe in my lifetime, maybe in yours, you'll see something like that. Barring, whether it's a Wall Street collapse, whatever, World War III, God forbid, or something, some catastrophic event, I don't think I'll see something like that. I mean, it kicked me in the ass. I'm not going to lie.
Kicked all of us,
anybody who was doing business back then who said, I wasn't affected by the Great Recession is full of it.
Yeah.
Period.
Sure.
So, but I got myself up. I got bumped. I got bruised. I got myself up. And I said, that's it. I know I can, at one point I thought, do I hang it up? No, I didn't. I wasn't going to do that.
Good.
I decided I was going to come back and I'll be stronger than ever. And I set my intention. And I like to, this is one of my Dweckisms, and you'll hear a few of them today. One, work smarter, play harder. Okay? Set your intention, impose your will.
Yeah.
And
I love that.
don't let anybody stop you. I know that I'm unstoppable. Everybody at this table is unstoppable because of our level of success and our level of perseverance, our level of stick-to-itiveness, to get it done and just get to the finish line and enjoy the journey along the way.
It's true.
So
Getting over those speed bumps. And,
yes.
Breaking through breakdowns. There's always going to be breakdowns, but you got to break through. Yeah.
Right.
Yeah.
So I'm very grateful for that. And as we're going into third quarter, let's see what happens. Now, again, I tune out a lot of the noise, and you and I have spoken about this. I get my news from some reliable sources. I form my own opinions. I do a lot of reading, and even in today's Wall Street Journal, the Miami market, they profiled the Miami market. And it wasn't negative. It just said it's settling down a little bit. Mm-hmm. And that's okay.
Yeah.
We're in a more of let's just call it a normal market. It's not a seller's market necessarily. It's not a buyer's market. It could be interpreted both ways. I still say it's more of a seller's market.
Agreed.
And if you're a landlord or landlady down here, I'm blown away. And I'll give you an example. This is just real life anecdotes and stories. You did an eviction. My first eviction, I can't tell you in how many years. Mm-hmm. You did this eviction. It was in St. Lucie. You knew what was great is they knew the nuances of that particular county.
Every judge is different. Every county's different.
Grateful for that.
Yeah.
Grateful for that. Got it done very quickly. I said, you know what? I bought the house right. I put a new roof on while I was evicting the tenant. And got the tenant out, got it renovated in less than 30 days. I put it on. I'm not going to share this secret yet, but I got it rented. Maybe we'll share it later. It's a teaser for them to stay on the podcast. So I got it. I put it up for I think I put it up $1,700 for a 3-1, like that.
Nice.
There's no rental inventory for the affordable piece.
So, and historically, residential rents have not gone down in the state of Florida.
Yeah.
Now, I don't know that they will.
That's so true. And we did that analysis 2005. We looked at the data because I started buying in 2010, 2011, 2012.
Right.
And we were looking at what people were paying for property in 2006, 2007, before the collapse. And we were looking at rents then. And then we were looking at rents in 2011. And we're paying half of what we were paying to buy the property, but rents were the same.
Right.
It's like, what happened there? I was baffled by that.
There was pretty much no dip. And one of the reasons for that during the foreclosure crisis, because I started my law firm in 2010. I was an attorney for 8 years before that, but was not working in real estate. But when we started our law firm in 2010, it was mostly exclusively foreclosure defense, short sales, loan mods that we were dealing with. Mm-hmm. But what I noticed is that so much of the supply of housing, so while housing was crashing, yes, but the supply of housing was coming off the market because people were being removed from the houses, and a lot of times these houses were not being put back on the market by the banks. So there was shadow inventory that was everywhere. So it's all supply and demand. So while demand might not have spiked up because people were hurting, people were losing their jobs, but supply kept shrinking and shrinking because of the shadow inventory, which kept rents at a pretty stable level, even in a catastrophic recession.
And a couple of points tagging on to what you're saying is that the difference back then in 08, 09 was people did not have equity. Now, There's plenty of equity out there.
Even people being foreclosed on now,
Have
there's not a
equity.
ton of them, but that
Yes.
that are falling behind. They have equity in their
Yeah.
properties, almost all of them.
And by the way,
if they've owned it for more than 2 or 3 years,
and if these properties, and they will start to go to foreclosure, you know better than I do, as quickly as they come to market, they'll be absorbed.
Absolutely.
My experience has been like I have clients reach out to me and say, all right, we want to buy foreclosures. And I'm like, well, let's talk about this. Why do you want to buy? Oh, I want a deal. I'm like, okay, well, a deal could be anywhere.
Right.
Let's start with that. Right. But these foreclosure properties, depending on how you define that, right? Because that's a whole nother discussion. These properties that are bank owned that come on the MLS, they're being marketed. And when I list properties for banks or when I short sell properties, the banks want their money. They're not like just giving these things away.
Right.
They're selling them for market value or somewhere close to that, whatever the reasonable price is.
The banks have gotten more savvy when it comes to, they're in tune with the Florida market. Now, a lot of REO brokers that I know either retired or they're not getting the listings. I mean,
Sure.
Agreed.
It's where you used to have so many REO brokers down here, that list has shrunk. And, I don't even know that I have funded an REO that I can remember.
It's been years since I've done an REO deal. Yeah.